All right, welcome wherever you're watching from. This is Kara Forex Academy, and this video section is just to show you how to go about your trading, the tool you need, and how to approach everyday trading. All right, so I believe most of us, most times when you see your charts like this, you get confused. You don't even know what you're looking out for. You don't even know where you're starting from. I know it can be very confusing to most persons. But well, to get started, first of all, I recommend you use this app called TradingView. TradingView is one of the best trading tools for technical analysis for every forex trader or a crypto trader or whatever analysis you do. TradingView is the best because it allows you to be able to make annotations on your charts. Even when you use trend lines, you can write down something. You can make your own jottings, note down things. Okay, so to get started first, or would like to start with this, just go to your Play Store or Apple Store and download Trading View, right? Trading View, this is the spelling. Just search for Trading View and download. uh Let me show you how it is being spelled. It is spelled like this: Trading View. So if you're also using a, what's it called, a system, a computer, so you can just use your browser and you go to tradingview.com, and there you go. Okay, so that is how, yeah, that is how it's been spelled. So now once you install the app for the first time, just kindly create an account, just sign up. It's not difficult. Sign up. You can just come here, you see menu, then I think, okay, you can, yes, if you are not signed in, it asks you to, like me, I'm signed in already. That's why it's saying me to, it's telling me to sign out. So if you don't have an account, just simply create an account. So let's come to watch list. Watch list, this is where you see a list of all the pairs you like to trade. If there's anyone that is on your watch list that you don't like, you can easily delete it. Just to delete, just click anyone, hold, and then click the delete button. Okay, so if there's any pair that you want to trade, I said I prefer just have one or two pairs you want to be trading, and that will be enough. You don't need to be trading multiple pairs, like up to three, four, five. No, at least one to two pairs is enough. It makes you a master in whatever thing you're doing in your trading, right? Without wasting much time, let us add. Let's say if your pair is not here, right, just go to add list. Once you click on add list, then you type the pair you want to. So okay, I think I have a lot of lists already covering my free listing. So I have not renewed, so that I cannot add much. Let me just it's one. Right, deleted. So now it's been deleted. To add, just go to add, and then I don't know what's okay. Sorry, I was mistake. Supposed to be add symbol rather. So I click on add symbol, and then just choose. Actually, I want to add Euro USD. EURUSD. So it can be any pair of your choice, okay? And then also type with, you wait for all the servers to come up. So you can see types of Euro USD and different. So server is like things that are offering you the Euro USD. So pick anyone you have FX, Rwanda, Forex.com, Pepperstone. So me, I prefer using Forex.com. So just click on Forex.com, and you see that it has been added there. So just click on it, come here, and you click here. So that will give you the chart of Euro USD. So once you're on this page now, let me just dress this thing a little bit. Um, okay, so the first thing I do once I want to start trading. So once you have this chart on your, the first thing you want to do is to remove these demarcations. Okay, let me make this thing bold. All right. Okay, so first of all, understand your tools first. Let me show you. Here is your pair, all right? Here you can switch from one pair to another. Here is the timing. You click on it, you can change from 15 minutes time frame to 1 minute time frame to seconds, as many as even to your daily, weekly, monthly, and yearly time frame. So this is where you select, you switch from one time frame to another time frame. Okay, so but for me, first thing I do is to start with the 15 minutes time frame. Now, the 15 minutes time frame, the second thing I want to do is to make sure that I have changed the date. Remember, forex is being coded with the New York time. So you want to make sure that the time on your trading view is set to New York time. Okay, now New York time is UTC. Just come here, click on this plate, go to settings. Okay, when you go to settings, go to symbols, then scroll down, you see time zone. You want to make sure change it to whatever your time zone is, change it to UTC minus 4 New York. Sometimes it might change to UTC minus 5 depending on uh, uh these daylight savings. Okay, so sorry, mine has changed again. Just click on it, go to UTC minus 4 New York, click OK, and then you want to come to events. Come to events, look at this session breaks, remove it. Okay, remove it, you don't need it. Then click OK. Now it makes your chart wide, clear, and open. All right, so the next thing you want to do is this. Once you have your chart like this, the next thing you want to do now is to start dressing your chart. Right, now the market starts by 12 midnight, like the market officially open. For this officially, the main official opening is 12 midnight New York time. So you want to demarcate your chart according to that New York opening time. Now what do? You go and pick your tools. Just come to this place, pick this tool, and then select vertical line. Okay, so when you select your vertical line, come to your chart, and then you start placing it at 12 wherever I see 12 midnight, you place it. Just be looking at the bottom part, it will show you the time. Okay, so just be dragging it. When you see 12 midnight, you put it there. This is 12 midnight. I'm putting it there. It's another demarcation for me. Let me zoom out, so you can see the line there. So you can change the color. You want to make it bold, or you can treat it anyhow you want. Okay, you can even write, okay, like here, this way I can change the color. You can just edit it, change the color. If you have a template, if you like the template, then just come here, click here, save drawing as. Right, so we already have a template for New York midnight open. Right, so once I get it, just click on it and automatically it will change. Just pay attention. Let me just increase it further to 30 minutes so that it will be visible. So this is how I go dressing my charts every day. Okay, so we have this one here. So I wanted to do something. Okay, let's leave it. I used to have, there's one shortcut that if you click, you can easily clone. So let us clone it. Go to clone, just make it double. So once you've doubled it, just drag it again to the next midnight. Okay, when is the next midnight? I guess it's here. You leave it, you clone it again, just like that. That is how you keep dressing your chart. You click on clone, you drag it again to the next midnight, which I believe is somewhere here, 12 midnight, which is 00. I guess it's somewhere here, somewhere here. So I went too far. Yes. Okay, yeah. So you keep doing it like that. Okay, keep doing it like that. So now, once you keep your chart this way, you will see that you will see the manipulation the accumulation, manipulation, and distribution that I've been teaching, it becomes very easy for you to spot. Very easy. Let us just put one more so that you see what I'm talking about. Let's double this. Let's clone it, and then I think that will be the final one. So you can keep doing like that, adding and adding and adding. So I can go back and study and see how price is really reacting to this midnight. Beautiful. All right. Now take a look at it very well. Now let's look at the chart very well. You will see something nice that is happening. You will see that after this midnight opening, all right? Can you observe? Here is where the accumulation starts from. Immediately after the midnight, what happens? Price goes up a little bit and then drops. This up movement is the what? Is the manipulation. Can you see it? Accumulation, manipulation, distribution. Price drops. Look at it again. Any day we are bearish, price opens here, goes up a little bit, that is the manipulation, and then drops. That initial drop. Then later on, it rallies up. Look at the next day again. Accumulation, price went up a little bit, that's the manipulation. Immediately after the open, what happens? It dropped, it kept dropping just like that. Now look at another day. Now look at this day where we are bullish. Did you see how the market also reacted? Immediately after the open price, that is the accumulation, right? We went down a little bit, that is manipulation, taking out these stops, and then we've rallied up. This is on a buy day, right? So you can see how it becomes very easy for you to see what the market is actually doing. So you need to know that all of these things you are seeing here are called candlesticks, right? They are candlesticks. They keep forming towards the right hand side. They keep forming towards the right hand side. So everything we are looking for, both the formations, the fair value gaps, they are being created by these candles. Let me zoom properly. Okay. Now let me just highlight certain things to you. Now if you go deep on the course, you hear me talk about swing highs, swing lows. These are examples of swing high. Whenever you see things like this form, it's called a swing high. So a swing high is a three candle pattern whereby you have one. Let me draw. Let me say this one. Let me clone this one again. Okay. Let me still clone it. Oh, copy. Okay, copy is best. Then I paste. So it's I want to bring it out to don't just give me some minutes. It's taking some time. So this is a swing high. So a swing high is characterized by when you see one candle on the left hand side, another one, another one. So a swing high is a high whereby it has a candle that has two short candles by the left of it and by the right hand side of it. Okay, that's how you get a swing high. This is a higher high, sorry, a lower high and another lower high. Okay, between the two ends of one candle. So once you see this type of thing forms, this one can still be a wick, this one too can be a wick, this one can be a wick, as long as the third candle does not go above the second one, or this one does not go above this one. Okay, sorry, as long as this third one does not go above the second one and the first one does not go above the second one, it is a swing high. So a swing low is the opposite. When you see this one now, sorry, this is a swing low. So a swing low is a pattern whereby you see a lower low, sorry, a lower high at the left of it and a lower high again on the right hand side of a particular candle. So these three patterns, when you see the market form something like this, it is a swing low. Now I'll take it, I'll show you an example. Take for example, what are we seeing currently? The market is currently forming a what? A swing high. You can see one, two, three. This one is higher than the one on the left and is higher than the one on the, so it's higher than the one on the right and higher than the one on the left. So this pattern here is called a swing high, right? This is a swing high, is a swing high. So swing highs create liquidity zones. They create liquidity zones, right? Yeah, they create liquidity zones. That's what I want you to know. And then if you also look at this point here, this is another what? You see this candle that has what? A lower high on the left, a lower high on the right. That is a swing high. So you want to be noting all these type of candles. Most times, these are the areas whereby price will get to and they will start rejecting. Look at this one again. Are you seeing it? This is a swing high. Now look at this one. This is a swing low. Why? Because this one has a short candle on the left of it and a shorter candle on the right hand of it. Okay, that's what makes this one a swing low. So this one is longer than this one, the one on the left and the one on the right. This is a swing low. Okay, so what you do first is to start noting out old highs. They are called what? Old highs and old lows. So you can just start by simply playing around with it like this. Just bring your tools, like your vertical tools. Okay, you can click on this, put it here, click it, and then you drag, extend it to the end. Mhm. Just keep extending it like that. Look at the next high. Look at this one now. This high is already causing a rejection. This is how you usually know that price wants to turn around. You bring it here and then, sorry, you click here and then you drag and you extend it. If you are using a keyboard, if you are using a system, when you want to extend, just press shift. If you press shift, it will make your line to be straight. You won't have a bent line. So press shift while you extend to make your line to be straight. So you can see here that price has gotten to a what? An old high, an old high. So it's likely to make this thing to reject and start going down. This is an area of liquidity. So if you want to also write on your line, just you can double click. You see this thing, so just write buy stop. See buy side. Put it at the top left, and then you make OK. So that is it, buy side liquidity. So you want to see if price will now give us a break of market structure here and begin to go down, then you can start selling. So that is just it. So it's not hard, just understand, know what is happening, right? Always just know what is happening, that this thing is always going up. So to where can it get to before it will reverse? Maybe if it doesn't use this one, it will use this one, right? And then you also want to learn how to find note fair value gaps. I've taught you what a fair value gap is. There are things that have already occurred on the past, and then you want to see how price can react to it in the future. Take for example now, this is a fair value gap. So you see this, let me zoom it out so you can see very well. So you can see this candle here, you see the lower wick, you see second candle, see the third one. The high of this candle is not touching the low of this candle. So here now it has created a space or a gap, so call it a fair value gap. So you can come here, come to your tools here, pick a rectangular box. If you want your own to be showing on top here, just make your own favorite. How do you favorite? Click on this rectangle, click it and hold. You will see add to favorite, click it or remove. So once your own is not as favorite, it will tell you add to favorite and you select add to favorite. So once it's having this yellow star, you always see it on the top here for easy navigation. So just take the tool, come here, put it, and extend it. Sorry. Mhm. You extend it to the future, and then you wait for price to get to it and see if it's going to react. So all of these things are I've taught how to make use of the fair value gap. The more you go deeper into the course, you will learn how to utilize each of these things, what you should be looking for whenever price gets to things like to areas like this. Okay. Mm. So I cannot cover all those things, everything here, but I just want to show you this video just to show you how to make use of uh your charts, the things you should be expecting. When somebody says Euro USD, I'm looking at a fair value gap sitting at so place. This is how you know that it is here. Okay, if someone said, okay, the fair value gap that formed on the 24th of August at the time 11:30, just bring your cursor and be looking at, just be tracing it. You see the down part, just pay attention to this lower end. You'll be seeing that black date. So all you just have to just be dragging your cursor. This is 24th August. They said by 11:30, then you take it, you see 11:30, then you should know that the person is talking about this fair value gap, and then you note it down and then you start watching it. So that is basically how to make use of this make use of the app and how to be anticipating certain things. Okay. Yeah, so just first of all, you need to learn how to demarcate your line. By 8:30, make sure you've sorry by 12 midnight, make sure you've put in on your time. Okay, your demarcation. So this demarcation now, any day you are buying, yes, something about this thing, any day you are going to buy, make sure that you are buying above, sorry, yes, any day you are going to be buying, make sure you want to buy above the opening price, sorry, below the opening price rather. And if you are selling, you want to be selling above the opening price. Okay, so this place now, this is the bearish candle, the opening price is at this candle, the top of this candle. So that is how it is. So you can be switching between 15 minutes to 30 minutes to 1 hour, everything is still there. Okay, so once you note midnight, the other time you want to note is your New York. You can also mark, if you want, you can mark your London Q zone. Still put up a line here, just take up a line and then put it from here. I think here should be London Q zone is by 2 a.m. So bring your cursor to 2. This is 1 a.m. here. This is all right. So that is it. You can mark it as your London Q zone from 2 a.m. to 5 a.m., which is here. Okay, look for 5. This is a.m. This is 5 a.m. That's 5 a.m. right there. Okay, so you know that this area is your London Q zone. From here to here, then you can now drop down to a lower time frame, and then you go and study back test whatever that happened within that period. Mhm. So you can see that from here is 2 a.m. This is midnight open. This is 2 a.m. and this is what from 2 a.m. to 5 a.m. This is your London session where you should be trading. Okay, when you should be trading. So now we are currently, if you look at my time, we are currently around 2:24, which we are entering the New York open, which is at 8:30. For if you trade indices, the New York open is 8:30. If you trade currency, it is 7 a.m. So you can take this here and bring it to 7 o'clock in the morning. This is 8, this is 7. Sorry, somewhere here is 7, right? This is 7. So 7 to 10 or 11 or thereabouts. So let's say from 7 to, let us use 10 to 10. So here is your what? Your New York session. So there's a way you can, to make it more understanding for you, you can just draw a line and indicate it. Maybe from here to here. Mhm. Then you can write under it. You can say it is your what? Your New York session. Let's put this in the center. You can see it, New York session. So any setup you are looking for, that setup should be found inside of this place. Okay, if the setup is not here, sorry. So any setup you are finding, oh, what's this? Sorry. Any setup you are finding for the New York session should be found within this zone from here to here. Okay. So if you don't get any setup around this zone, you know that you are done for that day. Then you wait for the next day. So, but one thing I want you to appreciate is that the New York session helps you to see how the market is really reacting. Once the market opens at 2 a.m., just you can see it after a few hours. In the next 2 hours, 2 a.m., the market goes up or goes down, creates this manipulation, and then it distributes for the day. So the cycle continues over and over and over, just like that. Okay, so it makes it very easy for you to understand what is happening. So I hope this video has been beneficial, at least helping you to know how to go about your chart, how you can set it up and dress it up.